Then you go to something a little bit more traditional, which we refer to as the buy and hold, which is just typically acquiring an asset as an investor and renting it out and holding on to it. So we do have a case study on this one that we published a few months ago. Once I got all the numbers. So this was a little 3-bedroom, 2-bath house in the energy corridor. This type of rental asset attracts a lot of young couples looking to put their kids in daycare. There's a lot of daycares in this area. And you see, you know, he owned it about, well, 4 years only in this case. And let's look here. And this gives you some actual metrics, again, if you want to calibrate that sheet in pre-acquisition. So he saw an average yearly appreciation of 9%. And a good way to see if, so in Houston, we've appreciated, the last 15 years, we've appreciated on average 5% in the Metroplex. So some areas have underperformed that, of course, and some areas have overperformed. This area did obviously overperform. How do you find those areas that overperform? They're usually the ones where the city is investing a lot of money, or they're being pulled by a neighborhood very close to them that is appreciating. So for example, the Heights has appreciated a lot. Now people look at the neighborhoods around the Heights as being pulled up by the Heights. So Independence Heights, Norhill Village, Northside Village, sorry, all those are close to the Heights, and they're forecasted to be pulled up by that appreciation. So there's always a leading neighborhood, and the other ones sort of follow and trickle over. But you'll see here an average vacancy of 2%. This was pretty much ready to go, but he did update a little bit visually, repainted and that sort of thing. So he's got an average CapEx budget and maintenance of about 3.5. And he was making on his cash about 8.8%. So when time came to sell, again, this equity multiple. So in a period of 4 years, he more than tripled his initial case. Any questions on the sort of buy and hold strategy?
There is a question in the chat. Why buy single family, townhomes, or multi?
Well, it goes back to the wealth generators. You get tax advantages on those, and you get this appreciation that you may not in a commercial asset. And it's usually a very easy step. A lot of people understand lodging versus maybe a commercial asset, which is storage or office buildings, maybe is less understandable. It's more liquid too, especially when you're in a big metroplex. If you have a single family home here in Houston and, you know, for any reason you're not happy with it, within a few months, we typically can unload that asset. You know, if you own a big building in downtown, it's going to be much harder to sell. So it's usually a very easy first step into investing. A lot of investors start with residential. And I think those are some of the benefits there.